As we've seen before, sharp and quick reversals are a preferred characteristic when deciding how a Fibonacci spiral could be positioned. However, if there's more range-bound movement after the Fibonacci spiral has been applied, it will usually have shorter lasting relevance, because with more range-bound movement, it's more likely medium to small-sized spirals will be used. And even if they are relatively larger, it's likely at least several options for placing spirals will result in relatively quick contact with the spiral closer to its center. This is just something to keep in mind in such environments, where clear reversals frequently take place in the medium to short term, but over an extended period of time, price could remain relatively unchanged. When the market enters these kinds of periods, keep this in mind even when applying larger and multiple Fibonacci spirals. Then naturally, as more decisive and directional movements make lasting impacts on the chart, many more options open up for the placement of spirals. In this case, we place two small spirals at the beginning of a downtrend, so as the price drop begins to weaken into October, these spirals will arc back down to meet the short-term bullish to neutral context, which in this case captures some of the most vertical and stable portions of a major bullish continuation. With so many options available in these kinds of market conditions, we can observe another variation with spirals placed around the downward reversal area that end up intersecting with areas of interest that contain bullish, bearish, and neutral context. By mid-October, it was clear the downtrend was at least pausing, since the chart stopped making regular consecutive closes lower. So a bullish perspective could use this more recent context to apply more appropriate spirals for the potentially significant shift in market sentiment. As would be expected, basing the spirals on these first few swing points led to effective short-term coverage, primarily the breakout from the bullish reversal range, after which the spirals became less effective as the climb began to weaken nearing November. As a usual alternative, we can use the same or similar swing points in the area and flip the spiral orientations, which results in slightly wider coverage up and to the right side, which is quite ideal to pick up where the previous spirals left off. Now let's try using the final downswing from the downtrend for more distance between the start and end point for a larger spiral. Then let's point in the same general direction with the next downswing that takes place in the developing uptrend. It does a good job at capturing the mid-400 price range where the last downtrend began and would be a natural area of resistance, though due to the way the spirals are pointing, they arc too wide for effective coverage to the right side. As soon as the green surge began, it was clear price was generally moving towards the direction of the top right corner in a relatively short time. When referencing those reversals from early October just before the breakout began, it was preferable to have spirals oriented so that there was short to medium term coverage up and to the right side. In a situation like this where there are two downswing points at nearly the same price range, it can sometimes be useful to make a V-shape from these downswing points down to a moderate or minor upswing point that's often in between them, to produce a short-term curve that closely approximates the neutral to bearish developments. Relatively good results here in identifying the approximate price and time ranges where interest was focused on the development of the bearish reversal range completing and drastically accelerating price lower. Though you can't expect it to be perfectly exact to capture intersections between the spirals and price during the largest drops at the beginning of 2023, especially since December had a prolonged phase of narrow horizontal movement. Within this most recent downswing and upswing, distinct swing points are lacking. So the next best thing is to reference the high and low candle prices from continuation candle formations, which can be considered the closest thing to proper swing points, and are some of the most impactful features during these trends, especially with distinctly bullish and bearish candles, along with candles with larger bodies and or high volume accompanying them. Here's another situation where a trend is taking off rapidly, so it is preferable to orient spirals for closer coverage towards the top right corner for this steep uptrend. But the lack of clear swing points after the initial upswing does make it somewhat difficult. There's a simple solution to this, and that's to not use swing points within the trends altogether, because they don't really exist in this case. Instead, use the clear reversal points and single candles, or also place a spiral in a vertical orientation except extend the distance from the start and end point to capture the absolute highs of these last reversal areas, or simply the general height of the past downtrend.